Episode 9 of The Wealth Show with Equity Kings. Welcome to The Wealth Show with Equity Kings. My name is Tumisho Ramondisa and I'm accompanied by my co-host Siyabonga Chuma. Welcome to the show, guys. This is going to be an amazing episode. We're going to get into deep stuff in the world of finance, deep stuff in macro. I mean, Sia's going to dive deep into Biden's infrastructure program or whatever we want to call it, policy. And I'll just start off by going into reverse repos. And I did promise you guys that I would get into reverse repos. So this episode, this is what's going to happen. So just a quick market update. We saw gold going down on the week, especially the gold stocks. The GDX is down 12% on the week. Oil stocks are down 7% for the week collectively, because of this whole narrative from the market that the Fed is going to taper. It's going to start its taper program, which is somewhat bullish for the dollar, which I don't see why it's bullish for the dollar. But nonetheless, there's this whole story going on. The Fed is saying they're going to taper their asset purchases, which doesn't mean they're going to stop purchasing treasuries. They're just going to do it at a reduced rate. So right now they're doing 120 billion worth of treasuries and mortgage-backed securities, right? So maybe they'll start doing 115, maybe next time 110. So you don't know. It might be small tapers, but it's causing a taper tantrum. Nasdaq is up because it's basically tech stocks, but Dow Jones and Russell 2000 is down for the week because those are more economically sensitive stocks. But just
with Nasdaq,
I think Nasdaq can hold its level, in my opinion. I think it can hold its level because it's basically a bubble. It's basically stocks that are in bubbles in Nasdaq. So that's how I see Nasdaq. But going into today's topic that I wanted to talk about, I just wanted to talk about reverse repos. It's been, I should have spoken about this months ago when it started exploding. So what is reverse repo? Because reverse repo is basically think of it as the repo market. So the repo market is a financial market or dollar funding market or any currency, depending what you're talking about. So in this case, we're talking about the US, right? It's a dollar funding market where counterparties come together and one counterparty borrows money and then the other one gives collateral. So let's say there's Bank A, or let's say JP Morgan and let's say a hedge fund. JP Morgan and a hedge fund want to do a repo, right? So what happens is JP Morgan has money, that hedge fund has collateral. This collateral is treasuries, most notably T-bills, government T-bills. These are short-term debt. So JP Morgan borrows the hedge fund money, and the hedge fund gives JP Morgan collateral, which is treasuries in this case. Therefore, why do we call it a repo? It's a repurchase agreement. You are having an agreement with JP Morgan that you're going to repurchase your treasuries overnight after a certain period of time. So this loan, let's say this loan is 10 days, right? So after 10 days, you give JP Morgan, as the hedge fund, you give JP Morgan the collateral. JP Morgan borrows you money at an interest rate, right? That's the repo rate, right? And then JP Morgan holds your collateral. They can do whatever they want with your collateral. But after 10 days, once you've paid the loan back, JP Morgan gives you back your collateral. That's why it's a repurchase agreement. You're repurchasing your collateral. So from the standpoint of the hedge fund, he is in a repo agreement. And from the standpoint of JP Morgan, he is in a reverse repo agreement. I hope we're on the same page there. So what's happening is reverse repos are spiking. These are reverse repos with the Federal Reserve, where the Fed is, from the standpoint of the bank, right, or from the standpoint of any counterparty that's doing business with the Fed, what's happening is all these counterparties, these money market funds, are going to the Fed and they want collateral. So they are going to go get collateral from the Fed. So the Fed is doing a repurchase agreement, but the primary dealers and all these guys like the money market funds are doing a reverse repo because they are borrowing the Fed money. And therefore, because apparently there's too much cash, so they're borrowing the Fed money. In exchange, the Fed is giving them collateral. Why is this happening? Reverse repo started spiking up in late March 2021, right? And till this day, it's still spiking. It's at 1.1 trillion, which means they're doing 1.1 trillion in reverse repo every single day. Every day, 1.1 trillion in reverse repo with all these money market funds. Why is this happening? Think about it. it means all these money market funds know that the Fed has collateral because they've been buying treasuries since who knows when, 2008. So the Fed has a bunch of collateral that the primary dealers want. So the primary dealers can't buy it from the Fed because the Fed is not selling. Because if the Fed was selling, they would have to raise interest rates, and they can't do that. So they would rather borrow it overnight to these primary dealers and do a repo transaction, and the primary dealers do a reverse repo with the Fed. So as they do this, what happens is they need collateral. Why do these primary dealers or these money markets need collateral? They need collateral because, remember, March was the last time we got stimulus from the government, right? Because the government, when the government does stimulus, they borrow money, right? And then they issue out more treasuries. So when the government does stimulus, it's good for the markets because the market has enough collateral, right? Quote unquote, enough collateral. I know there's other things like collateral multiplier, which I won't get into, but now the government hasn't been doing stimulus, or now they are starting to do something, which is the infrastructure bill. But before, the problem arose exactly when government stopped stimulus in March 2021. So think about it. There's no collateral in the system. The markets need this collateral so desperately. So the only place they can get the collateral from is the Fed, because all these hedge funds, no one has collateral. You can't find collateral anywhere. So this is all bad. And if you look at the historical charts, whenever reverse repo spike, a stock market crash happens. So I'm not sure if there's going to be a stock market crash this time, but maybe it is telling us something, because it always tells us something. Data always tells us something. So, Sia, what's your take on
it? Data always tells us something indeed. Now, looking at what Dumisha just said, telling you about that the government doesn't have collateral. So what you got to understand, we've been emphasizing this point from episode 1, that today, I'd just like you to know that we were put through a financial experiment, because you got to understand gold was a means of trade and gold was kept to a certain value. Now, when we move into fiat currency, you have to understand how much rules can be broken. Now, even transiting and comparing the data, if you look, the standards of living comparing after we moved out of the gold standards, the standard of living, it was hard to maintain the standard of living due to the amount of cash you have to have. Now, kicking back with inflation. Now, here it is. If ever we own a gold standard, we'd know that the government can only spend so much. Now, with fiat currency, the government can borrow as much as it wants. Now, going into this notion of fiat currency, of how the Treasury and the Fed control it, people are going to argue with me. People like Dumisho. I'm saying Bitcoin is the future in an experiment like this, because I feel like Bitcoin is the revolution of monetary policy. Now, whether you like it or not, Bitcoin is here and Bitcoin is still performing. Now, we have Bitcoin critics like Dumisho will tell you that Bitcoin is trash, but I feel like let's give Bitcoin a fair amount of space, like 50 years, because I think it's almost been 52, if I'm not mistaken, years since we moved from the gold standard by President Nixon. He decided to terminate that. Okay, so now here are the latest and current news. As we know, Joe Biden is into presidency. Now, he passed a 1 trillion infrastructure bill. So obviously, as Dumisha said, now they are buying less treasuries, because they've got this 1 trillion that they want to pump into the economy. So what are the effects of this 1 trillion infrastructure? What effects are they bound to have? So now you see what Joe Biden is doing is a risk, because potentially this 1 trillion has to be paid back with interest and taxes. And so how I'm looking at it, most information that I found in this article is that they want to rebuild roads, school, bridges, lakes, railways, subways, all of that. They want to refurbish it. Now, all during that process, obviously, there's going to be job creations, tenders being given out and all that. Now, cool. So now I feel like Joe Biden is putting a stimulus into the real economy, of which, if you look at it now, I don't feel it's going to be that innovative, because I do feel he's taking a risk. He passed this 1 trillion plan in hope that the economy would go in a certain way. Now, yes, I do not know much of what's likely to happen. I'm about to read more on the story. But as far as it seems at the moment, Joe Biden has no idea of what he's doing with the because this plan of his with the infrastructure bill of trying to create jobs is not really innovative. He's got to realize we've adopted into new types of markets, which new type of innovative thinking. I mean, certain markets are becoming obsolete. Not everyone wants to do a 9 to 5. Imagine, let's just look at the age group of the United States. I don't think a lot of those people, like the youth, would want to be working on building bridges and all that. Although yes, someone has to do it. Cool, it is gonna create jobs, but is it? Here's my main question: what Joe Biden just did, is it gonna make the United States more competitive in the world economy? Okay, because by far, by chance, China is the best at producing goods and services. Yes, China might have mimicked ideas, but their production is top tier, and you cannot disagree with that.
This podcast episode is proudly sponsored by Libertex, arguably one of the biggest forex brokers of the 21st century. Libertex has a wide variety of financial instruments to trade with, from currency pairs, stocks, energies, and even a broader variety of commodities to trade. I personally use Libertex, and the one thing I love the most about this broker is their incredibly low spreads. Libertex has been operating since 1997 and has won over 30 prestigious awards worldwide, and is even a sponsor for Tottenham Hotspurs. So click the link in the description to sign up and enjoy the perks that come with trading with a world-class broker.
Okay, so now here's another thing that's really interesting with the infrastructure bill. I mean, we've got phenomenon companies like Amazon. If we look at how many spaces Amazon is in, Amazon is dominating. You know, just read on Amazon as a company. There's a lot that's happening behind Amazon, Apple, Tesla, and all that. Sweet. So now, as we know, when he was rallying to become presidency, Joe Biden, quote unquote, he said if ever he becomes president, these high corporations that got filthy rich during the pandemic, he's going to put corporate tax into it. Now, what does this mean for the stock stakes? Now, as Dumisha said, that when the reverse repo spikes, we are bound to have a crash that's bound to happen on NASDAQ. Now, you see the timing here. We might not know when it could happen, but looking at the factors we have in play at the moment, I feel like a market crash is likely. Because if ever he obviously is going to dig in, and you might find that these companies are going to pay high tax, okay? They're going to pay high tax to the government, and the government is going to fuck around with the people of America. And yet, these companies will not have enough money to expand themselves because this tax is a lot of money. Now, looking at it in terms of trillions, it's a lot of money that the government will be raking in from these big tech companies, of which it's going to deny growth for them, of which, if you look at it, these companies create a lot of jobs. So by him taking from the companies to execute his own plan in the economy, of which it might end in a disastrous manner, he is actually killing the economy of the United States. And he doesn't realize this. So I'm on the notion of that corporate taxing is not really good, because I feel like he is fiddling in with the free market, because he's killing the free market in the United States, because such barriers will limit the growth capacity of a certain company. Would you agree with me there, listener? I mean, what do you have to say? That is just my philosophy behind the whole thing. So if ever this thing is passed out, investors are going to want to pull out because they won't be yielding as much as they used to. So they might look onto other things like Bitcoin. But that's a story for another day. I'm not saying it's going to completely crash and there won't be any value. But yeah, it is going to have some sort of effect to these companies.
But also, Sia, even if you think about it, right? Look at it from this perspective. Like what I took from what you said was, it's obviously gonna screw with the free market, right? But think about it also in this way. Think about it like this. Biden wants to increase taxes, right? Think about how that works. That means lower earnings for companies, right? And then if there's lower earnings, it means most likely they're gonna have to reduce pay or something like that, or they're gonna have to increase prices. Because think about it, people don't understand how corporate taxes work. Corporates don't pay taxes, only people pay taxes. You know that you can't, a building doesn't pay taxes. So think about how corporate tax work. The company doesn't pay corporate taxes because before, think about how it works like this. The government, when let's say there's zero corporate taxes, right? The company makes a profit, right? It makes a profit because people buy their goods or services, right? And then if government increases the tax rate, maybe from 0 it goes to 5%, the company's gonna raise prices, or they're gonna cut employee salaries, or they're gonna cut shareholder benefits. You see, then it means in that sense, when you look at it like that, it means it's not the corporation that's paying the taxes, it's the people involved in the corporation, whether it's the customers, the shareholders, or the employees. So you see, whenever, exactly, that's a dumb thing about
and here's what's likely to happen, because these companies, they could do that because it's their product. They could have a serious meeting and be like, look, the government is doing this to us and we need to prop up our balance sheet. So what would these companies do? They would most likely raise prices for their products to try and fill in that gap. And what would that mean for consumers? It would mean that sales would go down because now it's expensive to source the product.
Yeah, I think I see it from that perspective. But you see, either ways, it doesn't matter where you look at it. Wherever you look at it, corporations aren't just gonna squeeze those losses. They're not gonna eat those losses because Biden charged them a higher corporate tax. They could use many methods. And think about it. If it's a big company, right? Because these politicians say, hey, we need to increase corporate taxes on the rich because the rich didn't pay anything. Hey, they must pay. As if a corporation is a person. So think about it like that. A business like Amazon can actually eat those losses. Think about it like this, because Amazon has money, so they know that corporate tax doesn't apply to them only, it applies to all businesses. So the small businesses are going to get hurt, and then the small businesses eventually are going to get out of business. They're going to run out of business. Therefore, Amazon doesn't have to increase their prices. They could just eat the losses in the short term, so that once these businesses are out, they can now increase prices, and then their monopoly grows. You see, so it actually helps big businesses when government does all these things is, we're going to increase taxes. All they're doing is they actually making big businesses bigger and small businesses smaller. So that's that's the whole economics of intervention. Government, that's why government intervention doesn't work. It's been proven historically it doesn't work. You can't, yeah.
And here's the danger of American economics. The capitalism there and the monopoly is so huge that the government can really do nothing. Recently, I read in an article that if you want to see that Jeff Bezos, Bill Gates, and I think Elon Musk is coming right around, but just these two guys, I could let you know that they are running America, whether people like it. So Bill Gates and Jeff Bezos, as we know, Bill Gates has got good shares in Microsoft, with ventures out to Google, all that other stuff. So if you look at Bill Gates at the moment, now I'm talking about the food supply and the amount of land that Bill Gates and Jeff Bezos owns. I think it's something acres, but they own a good chunk of private land in the United States, of which part of that land is farms. Okay,
yeah,
but
Bill Gates owns a lot of farmland. Yeah. He owns a huge amount of farmland, a lot.
So you see, all those powers are in his power. He could raise the food prices if he wants. Like there's a lot of things he could do because he's got his finger in every pie. So yeah, that is capitalism for you. I don't think, and here's the funny thing. Like if you look at how our society, I'm just going to go off track, but if you look at how our society is structured, is like if you look at it at around 60 if you're at that age, you're no longer good for the economy. You should take pension and let the young ones rest. But ironically, here's the other thing: you will never ever see a president that is around the age group of 30 to 40. It's always these old fuckers.
Yeah, it is. It is. I think that's a problem, like from a political perspective. But yeah, hey, you see, politics. It's kind of tricky talking about politics because someone might be there and say, "Hey, the old people have wisdom. Hey, Tumicho, I will no longer support you anymore because what you said." You see, politics. People use their emotions when it comes to politics, and like just going back to Sia's point, right? I remember Sia's when he was talking about Biden's infrastructure bill. He spoke about the fact that he's gonna have to get that money from somewhere. Like I think he was emphasizing on my point that they're gonna have to borrow it. The Fed is gonna have to quote unquote print it, which is obviously not true. They don't really print money; they only print bank reserves. So think about it. If the government wants to do infrastructure, I mean that 1 trillion infrastructure bill is the first one. There's another one which is 3.5 trillion, which is still trying to be passed in the Senate or whatever those regulators or whatever legislation it has to go through. But think about it. Where's government going to get that 1 trillion, 3 trillion? Where are they going to get it? Obviously, Sia said they have to borrow it. How do they borrow it? They have to go on auction and on treasury auctions and auction out treasuries, right? They're going to have to auction out treasuries to these primary dealers. And then after they auction it to these primary dealers, the Fed is going to have to buy it from the primary dealers.
And here's what it means.
The money supply. Yeah?
Maybe to some people, in a nutshell, when the government is selling their treasuries, it means that the amount of gold that they have kept in their vaults, they are selling it to Europe or whichever hedge fund or country is willing to buy that treasury. Okay, so they transfer it around banks as IOUs. Okay, so that's why we moved out of the gold standard, because they realized, oh, moving gold from one place to another is expensive. So if you keep it kept in our vaults and control the money supply, and then if ever we need more of this fiat currency, we can just sell the gold we have in our reserves and just print more and print more, because now it doesn't matter the amount of gold they have as long as they have this fiat currency.
IOUs, yeah. As long as they just have a number of digit screens, things that are on a digital number on a screen. As long as they have that, they can just bypass the whole gold standard system. That's why and remember, you see these guys, right? They like using the word temporary or transitory. Richard Nixon actually said in 1971, we're gonna temporarily close the gold window. He said temporarily. He literally said that. I'm not lying. And imagine, it's been temporary for 50 years.
Such a long time.
So much for temporary. Think about that. Think about how absurd that is. I mean, there's nothing temporary about that. As we even spoke about this on the previous episode, the one that's titled Tether Unsafe or whatever coin. So we spoke about the gold standard. I mean, think about how absurd that is. And they don't want the gold standard because think about it, gold is very scarce. Think about that for a minute. Gold is very scarce. Only like 2% of gold is being mined. The supply increases by like 2%. And that's assuming that there's you don't know when gold will end. You don't know when there won't be any gold in underground. You don't know when. I mean, it could end in 2030. Who knows? You don't know how much gold there is under there. You see, it's all wishful thinking. So the government knew that, hey, this thing, gold might be finished underground. So also we might just end this gold window because the dollar, everyone needed gold, and the dollar was a weight of gold. So obviously everyone needed gold, and the government didn't have enough gold to back up how much people needed the gold. So you see, they had to close it like that. And as Sia said, those IOUs, now they can just bypass that system and just create IOUs. And the Federal Reserve can just create bank reserves out of thin air to buy treasuries, which further increases the money supply. I'm not saying bank reserves is real money. It's not real money. It's base money. You see, there's a difference. Broad money is M2. Base money is M1 and M3. You see, there's a difference. Base money cannot create inflation because it's money that's in the banking system. It's not real money. You see, but broad money is when the government does stimulus. You see, that's when they increase broad money. Because if the government does stimulus, it means more people have money in their bank accounts. That means the deposits, the liabilities of the commercial bank goes up, which means also their assets correspond. It means the assets go up. It means the commercial bank's balance sheet goes up. Therefore, money supply goes up. So you have to look at things from that. Imagine if we're on a gold standard. Think about that. Would they be able to do such $1 trillion stimulus? I mean, no ways. They wouldn't be able to do that. Not by a mile. They wouldn't. They would have to raise taxes. And think about it, Sia. When Sia was talking about the corporate tax rate, right? That it's gonna crush businesses. When we're saying it's gonna crush businesses, that's assuming that the businesses will actually pay the taxes. You see, when government increases tax rates, it doesn't guarantee that they're gonna get more money. You see, they might not, because businesses are smart. They're gonna find ways to pay less taxes.
This is some point.
Exactly. They're gonna move it overseas or something. The only guys that are not gonna dodge it are the small businesses. I mean, the small businesses are screwed in that sense. They can't dodge it. They're gonna have to go out of business someday. I mean, it's dead near impossible. The Reaper, the government Uncle Sam Reaper, is coming at the business's door. So you can't run away from the Reaper. Of course you can't. But then big businesses can. Like Apple. Think about when Obama was president. Corporate tax rate was 35% when Obama was president. What did Apple do? Apple moved their money using this thing called what is it again? Something sandwich, whatever. That technique. What is it? Dutch sandwich or something like that.
I'm not aware of that.
Yeah, I mean, it's Dutch whatever sandwich where they put those offshore money in Netherlands and Ireland and whatever, so they can just clean their money like that. But it's legal. It's perfectly legal. It's like legal money laundering or tax evasion or tax avoidance. And then think about it. Trump comes into office. Trump drops the corporate tax rate to 21% from 35%. Then what did Apple do? Apple brought all of its money back and started paying with that lower tax rate. So you see, once you have lower tax rates, corporates actually pay more in taxes. That's the funny thing about it. No one actually understands this phenomenon. So yeah, I don't see government doing anything like that. I mean, Sia, what do you have to say about that?
Hey, this is some powerful things, guys. Hey, Tumish is blessing us with knowledge. Hey, we're all baptized in the word of finance, bro. But yeah, guys, as you can see, the government should not partake in the free market.
It shouldn't.
It should not. It has dire consequences, because the government will promise people billions of dollars if everyone donates R1 to them. And you find there's 10 people, like literally. So you see, it's all a bunch of empty promises at the cost of the people, the standard of living, you know?
Yeah.
Because now I feel like we don't really have visuals. But if we look at visuals, if ever we open up visuals and open this data and contrast it, average hourly earnings from 1960 till now, the employment rate, interest rates, inflation rate, okay, the growth in the housing market, production, you know, if ever we could get visuals and contrast that data, you know, they say data speaks 1,000 words. So
is that a new saying? Is that a new quote? Let's give him that quote. Let's give him that quote.
Yeah, but if you know, you're gonna interpret the data, so it can be 1,000 words as to what does this data mean, and is history bound to repeat itself, all those type of things.